Can you use your car as a business expense? That's today's show. Let's dive into it. Hey everyone, I'm Clayton Morris.
I'm Natalie Morris.
And welcome to the Investing in Real Estate show. This is the show where we try to help you build financial intelligence. We use buy and hold real estate as our vehicle to passive income and monthly cash flow. But there's so many different ways to build cash flow. There's so many different ways to lower your taxable base, I guess you could say. And we talk about all of those different strategies here on the show. And one thing that we talk about regularly is setting up a business, right? Setting up your LLC, becoming smarter by incorporating your family. And then there's so many expenses as it relates to that. So I want to read a question because we got one from a viewer. Jeff Shelton wrote us. He said, "Hi Clayton, I'd like to submit a request for your podcast to cover the issue of a company car and if it's beneficial to have a lease or purchase, to pay monthly or pay it off, and how to write off the expense for such a car." Jeff, great question. I'm going to hand it over to Natalie and going to go take a cigarette break.
No, you're not. You're going to stay right here. Okay. So the reason that he says he's going to hand it over to Natalie is because I'm the one who tries to figure out in our life, can we legitimately funnel this expense through our business? Now, why do we want to do that? Let's sort of back up just a tiny bit. Now, obviously, if you own an LLC inside of your family, right, there's some kind of business that operates out of your family, whether you sell masquerade masks on Etsy or you own real estate, right? There's a spectrum of what you could be doing to make money inside of your house as a legitimate business. And then what we do in our house is try to make sure that what we need in our lives, we can legitimately pay out of the business expense. So we like to have cell phones. We pay that as a business expense. That means that that expense is paid for with pre-tax dollars instead of post-tax dollars, right?
Right.
So we do that as much as we possibly can. We have entire episodes on that. Hopefully this is an agreed upon value. So now we can talk about, that's obviously why you want to have a car as a business expense, right?
Right. And I get excited about this stuff. And by the way, I don't smoke, but I might start because it's tax time and, you get a little stressed during that time. But, I get excited about these different expenses that we can write off, whether it's, your printer in your office or the computer that you're buying for your business, or it's things that you might not even think about. Maybe it's your internet access or your newspaper subscription because maybe you're a blogger and you write about current events like we do. We talk about, hey, Amazon just built this plant and it's going to affect real estate. So if you have a Wall Street Journal subscription, those things are a write-off for your business.
Because as an individual, right, if I get paid as Natalie Morris, the lady, and I report those dollars on my own personal Social Security number, then I'm going to get taxed on the total amount of what I've been paid. So I make $1,000, I get taxed on $1,000. But Natalie Morris, the LLC, if that company makes $1,000, but I had $500 in expenses, well, now I'm only taxed on $500. The expenses lower your tax rate, right? So you want to make sure those expenses, you don't just buy things to lower your tax rate. That is not the way you do it.
That frustrates accountants. People call, can I buy a computer at the end of the year? Can I do all this stuff? No.
But instead you buy things that you would want anyway with pre-tax dollars, right? So here's a funny little personal share is that I like to have my hair blown out
Yes, she does.
Pretty regularly because I don't like to do it myself and because it's amazing.
I have to hear about her hair on a regular basis.
Yes.
She's like, my hair today. The thing.
And so obviously we make money by podcasting to you. That's one of our revenue streams. So before we do these shows, I go and get a blowout. Now those blowouts last me several days, right? But I do it for the show. That is a pre-tax expense. It is allowed.
I don't even know how that's possible. Number one, that a haircut or a blowout could last like multiple days.
Because I never wash my hair.
So when I wake up in the morning, my hair looks like a rat's nest. So if I got it like done the day before, I would wake up, it would be an absolute mess. I'd have to shower and get it taken care of.
We're totally off topic of a car. Okay, the point is that my hair looks nice like this.
The bottom line is
I use pre-tax dollars.
Right. The bottom line is you can get things that are for your business. If you have to do a photo shoot for your website, you go and get your hair cut.
Right.
Like those things can be legitimate business expenses. So begin to brainstorm and think about those things. So Jeff was brainstorming about purchasing an automobile And perhaps if he's a real estate investor or if he owns an LLC, how can he benefit from purchasing a car?
Okay, so Jeff is trying to decide, can my LLC own it or can I own it, right? Is that the main question?
That's the main
or
part
is
of
he
the
talking
question.
about lease versus purchase?
Well, both.
Where should we go first?
Okay, well, talk about the purchase part. So should he, the person, be the owner of this car or the LLC be the owner of this car?
Okay, your business can buy a car, but you have to prove that you legitimately need it for business expenses. Now, me, what I use my car for, I have a big old family sedan with 3 rows, right? And I just do carpool. Like I go and I pick up my kids from school and I take them to golf lessons and that's about it, right? I don't run around actually looking at our properties. So few of our properties are in the state we live in anyway. I don't know, I sometimes go meet with bankers, right? But it would be really hard to prove that I needed this car for our business, right? You, on the other hand, you do go look at our properties. You do go meet with investors that you don't otherwise need a car, right? You can't say, I need a car to drive to my business, like you have an office in your town, because the IRS doesn't let you have a car or write off mileage just for commuting to the office.
To the office.
That
okay.
doesn't count. It has to be trips that you go on. So if you can legitimately make the case that you need this car for your business, you can then buy a car with your business.
Perfect example, Joe the architect, right? Our friend the architect.
Yes.
Great architect in Pennsylvania. We met with him this week, and of course he has to go around and visit clients all the time. He's going to sites. We were walking through the woods, looking at stakes in the ground on where this build out is going to take place and all of these things. He's driving to that location.
Right.
So that's a legitimate business expense. He's using that car to go out and scout locations for his architectural business, meet with clients on their job sites, and therefore that's an easy write-off.
Yes, you cannot really write off a car in this same way if you lease it out, like an Uber car or like a utility vehicle, like a steamroller or something like that. Like those things have their own rules, right? I mean, you could buy a car to start an Uber type business. That's very different. So
you're saying like if I leased a steamroller for my business.
There's a completely different set of depreciation rules for that. There's different. So we're talking about like car you drive to work. Now there's some sort of tax rules around luxury vehicle versus, like I guess non-luxury vehicle.
Right, regular car.
Well,
like full-size in the new tax law, full-size trucks are now given an extra advantage. You can write off like 100% of that. I mean, your father who runs a large landscaping company,
Right.
I mean, the benefit to him in this new tax law is phenomenal because he's buying a lot of these big trucks.
Now, your LLC can go to the bank, and if it's an established business, perhaps either get a loan for that car or buy it outright if you have enough cash. You also can take your existing car and gift it to your LLC if you want. That is a capital contribution, and you'll want to talk to your accountant about how that works. You don't really get reimbursed for it so much. You just say now the car is owned by the LLC. But then, all of your expenses, all of your maintenance, your tires, some of your gas purchases, right, go on the company credit card or the company bottom line, right? You're paying these things, again, with pre-tax dollars.
So how does mileage go into this? So mileage separate than actually owning the car, right? So you can get the reimbursement whether or not you have it in an LLC or not.
Well, we're talking about things you write off now, right? So if you own the car in your LLC, yes, you are going to write off the mileage, right? And you're going to depreciate the vehicle. Your accountant should be able to help you do that. You're going to write off those expenses, right? So you can just decide either I write off mileage, you get a specific, I think right now it's around 54 cents per mile if you'd like to do it that way, or you can just write off actual costs like gas bills, tires, tune-ups, that kind of thing, oil changes.
And I know what for instance, your father and his company with these large earth-moving vehicles, what he made the point that these things retain their value. So if he's purchasing one for whatever it is, $1 million, that the depreciation actually allows him to, when he decides to sell it 10 years from now, get the full value back plus the depreciation from the government. So again, the government, the tax code is written to incentivize entrepreneurship and business owners. And so if it's an incentive for him to go out and buy a large thing from Caterpillar company, right, that helps Caterpillar, it helps the jobs, it helps his company, and then he's also able to write off that depreciation, and then it still retains its value.
Right. Now, if your employer owns the car and you use it for company trips or, work trips, again, not commuting to the office, that doesn't count. Everyone has to get to work. That's just sort of, none of us get any kind of perks for that.
Yeah, we don't get
right?
a Star Trek teleporter to get to work.
So it's like you go on some kind of outing, or my first job was as a reporter. And so I would write down the mileage that I went out on stories and then send that in, and I would get a specific amount back on my paycheck every week when I reported my mileage. So you could do actual costs, or you can sort of estimate mileage and take, so much per mileage. That's up to you. And you need to work with your accountant to figure out. Usually it's nominal. You just kind of choose one or the other. So
all right.
That's that.
So is there any more to this saga about getting a car?
Again, you want to make sure you're taking full advantage of depreciation. You want to make sure that you're doing the right way of like minimizing or writing off your expenses, right? And then you want to make sure that you've got really good proof, because if the IRS came to me and said, hey, lady, all you do is pick up your kids from school, why are you writing off this car? You'd be in some deep doo-doo, right? So you need to be able to prove, like with Clayton, again, you could look at your schedule and say, oh, he does meet with investors at coffee shops all the time. He does look at these properties. He otherwise doesn't need a car. He doesn't drive to an office, right? That's not a part of your sort of commute. So, in which case the IRS would understand.
Right. So make sure you have a good accounting of it, because that's what one way is the IRS is sort of cracking down. As you've listened to Tom Wheelwright, our accountant, talk about it, have a good record of it. And, a little dongle called Automatic, it can plug right into your car's dashboard in the diagnostic port. If you go to, I think it's like automatic.com, and it actually will track your mileage for you. You can tag it in an app with your smartphone to let it know, hey, this is a business trip or this is personal. And then you can actually add it right to a Google spreadsheet. Automatically, it does it. So you can track all of that for free using that little like $25 dongle. There's little automated ways to make your life a little bit easier if you're an entrepreneur. So
I also keep spreadsheets for our vehicles. Maybe there's an app to do this, but I've just sort of always done it because when I sell the car, I want to give the new owner, instead of just like a file of a bunch of stuff, I give them an Excel spreadsheet and I just say, here's the date, and I just have it organized by date, mileage, and then what was done to it, whether it got a new tire or whether it got a 30,000 mile service, what was there. So I can give them those receipts, but they don't want that, right? So keep good records of your car, and then, you won't have to do so much digging. It's just a matter of keeping a lot of good records, because, okay, here's a fun little factoid. People who do business...
It's fun fact time.
People who do business in their own names are much more likely to get audited than people who do business in an LLC. So, you're doing all of this in the event of an audit. If you have an LLC and you're doing it right, the government thinks, well, this person's at least got this far. Probably they're not doing some shady stuff, right? So you're only preparing for the worst, really?
I think that tells you a lot, right? If the IRS thinks that, hey, if you're doing business and you're just doing business in your own name, like you're the plumber and I'm writing you a check to Joe Smith and that's it, not Joe Smith LLC, then the IRS probably thinks, probably not the savviest bookkeeping going on at this person's house.
Right.
I mean, that's a pretty interesting insight into the way the IRS views people that don't know that they need to incorporate in order to protect themselves and do things properly. So there you go, Jeff. I hope that answers a question about purchasing a car in an LLC. Well, I'd love to hear your comments in the thread below. Let us know your thoughts, and you can always weigh in and send us show suggestions if you would like. Thank you so much for subscribing. Now go out there, take action, and become an investor, real estate investor. We believe it's the #1 way to build wealth. We'll see you next time, everyone.